One Up on Wall Street by Peter Lynch and John Rothchild, Getting the Story. Welcome to yourbooksummary.com. When considering investing in a company, it's important to understand their unique narrative and why they are positioned for success. It's also helpful to have some knowledge of their industry. Companies may seem like anyone could run them, but that may be due to their advantageous position in the market or streamlined manufacturing process. In addition to these factors, 13 other traits indicate a company is a good investment opportunity. It sounds dull or, even better, ridiculous. It does something dull. It does something disagreeable. It's a spin-off. The institutions don't own it, and the analysts don't follow it. Something is depressing about it. The rumors abound. It involves toxic waste and the mafia. It's a no-growth industry. It's got a niche. People have to keep buying it. It's a user of technology. The insiders are buyers. The company is buying back shares. Certain signals indicate which stocks to avoid, such as the hottest stock in the trendiest sector. Whenever a company is labeled as the next big thing, such as the next Intel or the next Microsoft, it's best to be cautious as these stocks usually don't perform well. Diversifications: when companies acquire other companies for diversification, it often leads to negative outcomes. Mergers usually need more synergies, and investors pay for poor decisions. Whisper stocks: stocks people speak of in hushed tones usually involve risky investments. Avoid those claiming to solve big problems like back pain or oil shortages. The middleman: a company that relies heavily on one or two key customers as a middleman is at risk, as losing even one customer would be detrimental. The stock with the exciting name: search for companies with unremarkable names to avoid artificial price increases. When you consider buying a share of stock, it's important to remember that you're investing in a real company with real earnings and assets. The key to determining whether a stock will rise is understanding the company's value and its potential for success. Before investing, developing a 2-minute monologue explaining why the stock interests you is a good idea. This will help ensure that you truly understand the company's worth and potential for growth. Remember, buying a stock is a real investment, not a game of chance. I hope you found the information about One Up on Wall Street by Peter Lynch and John Rothchild. If you're interested in learning more about the book, stay tuned for the next part of this series where we'll dive into the next section. Thanks again for watching, and I'll see you in the next video.